I've watched this industry ride the highs of panic buys and the lows of warehouse overstock. But what's happening right now feels different. It's not a slowdown, it's a breakdown. Between collapsing ammo companies, overstuffed shelves, and a market that's gone ice cold, the U.S. ammo industry is quietly falling apart, and nobody's talking about why. What's up, everyone? This is your boy Ted from Line 45. And today, I'm digging into the real reasons behind the ammo industry's brink of collapse, and why your local shop might be next. Before I start, I would really appreciate it if you would push those buttons below, the subscribe button, the notification bell, all of them. This is not necessary, but those little clicks help a brother out. Plus, it pushes me to give you more valuable gun-related content on your screen. Now, buckle up, and let's get back to the video. I was at a rural shop in Oklahoma last week, the kind of place where brass usually moves faster than milk. Walked past stacked cases of 9mm, .223, even some .300 blackout, which is priced better than I've seen in years, and not one guy was walking out with a box. That's not how this usually works. When prices drop, we buy. But now, even with bulk 5.56 hitting 35 cents a round, the shelves are staying full. And that's a red flag most folks are missing. Industry numbers are confirming what we're seeing in shops. Demand has dropped through the floor. FBI NICS checks, which loosely track firearm purchases, are down 40% compared to peak years like 2020 to 2021. That trickles down hard on ammo sales. Add in economic fatigue, including rising utility costs, food, and mortgages, and shooting has become a lower priority for a lot of working folks. Doesn't matter if the price is good if you're trying to stretch a paycheck. This isn't like the last slowdown in 2017. That was just a correction after a buying frenzy. What we're seeing in mid-2025 is a structural drop in consumer activity. The panic cycle is burned out. The market is saturated. People who wanted ammo already stocked deep during COVID and the election years. And now, manufacturers are holding inventory they can't move fast. What happens next isn't just about demand. It's about where that ammo came from, what it cost to get here, and why producers can't just stop the bleeding overnight. The U.S. ammo market right now is clogged with inventory, and it's not just a demand problem, it's a supply misfire. Distributors and manufacturers bulked up hard in late 2023 and early 2024, expecting another buying wave, especially with rising global tensions and political uncertainty. But that demand never materialized. Instead, shops and warehouses are loaded with unsold stock, and price drops still aren't moving the volume. One key trigger was the 2025 federal import tariffs. Ammunition from overseas producers like PMC of South Korea, PPU of Serbia, and Igman of Bosnia was hit with tariffs ranging from 25% to 37%. These brands have traditionally kept American range ammo affordable, especially bulk 9mm, 5.5, 6 NATO, and 7.6 2x39. The tariffs immediately spiked import costs, which wholesalers had already committed to before the rates were finalized. When the market cooled instead of spiking, U.S. place, suppliers and importers were left holding millions of rounds that no longer made financial sense to move at pre-ordered prices. Domestic producers like Federal, Winchester, and AAC also scaled up too early. When their production pipeline kept running and buyers didn't show, inventory ballooned. You can now find bulk 5.56 as low as 35 cents per round and 9mm under 21 cents, in some regions numbers that would have sounded fake 3 years ago. The industry's overreaction to a panic that never happened created a backlog that's now suffocating smaller players. Some have already folded under that weight, and more closures are coming. That brings us directly to the financial fallout hitting the industry from the inside. Financial pressure is hitting the U.S. ammo industry hard in 2025, and it's not just small startups feeling the heat. Several well-known names have either filed for bankruptcy or are actively offloading assets to stay afloat. One of the most watched is Ammo, Inc., traded as POWW, which posted an $18.7 million net loss this past quarter. The company is now at risk of being delisted from the NASDAQ due to low trading volume and plummeting valuation. This is a brand that was once hyped for innovation and high-volume contract potential. Now it's bleeding cash with no real buyer demand in sight. Atlanta Arms, a go-to for match-grade and law enforcement contract ammo, also entered financial restructuring this year after sales collapsed by over 40% from their 2021 highs. While some operations are still ongoing, contracts have dried up, and dealers report limited restock since early spring. SCCY Industries, known more for handguns than ammunition, officially shut down its ammo facility and ceased in-house cartridge production, citing unsustainable operating costs. Retailers aren't immune either. Online platforms like True Shot Gun Club and Lucky Gunner have significantly reduced their inventory breadth and volume. Some are merging operations or shifting exclusively to top-selling SKUs to avoid overextending themselves. The takeaway is simple. When production outpaces consumption and cash flow dries up, businesses fold. The ammo world has always had slim margins, but this year exposed just how fragile it really is. Still, not every company is going under. Some are adapting and building smarter. Let's break down who's still standing and why. While smaller ammo companies are closing their doors, the big players with diverse revenue streams and long-term military contracts are staying in the fight. Federal, Winchester, and Remington, brands under the Vista Outdoor umbrella, have slowed down consumer production, but they're leaning into DoD orders, law enforcement contracts, and export sales to stabilize operations. These companies aren't immune to market pressure, but their infrastructure, capital access, and vertical integration keep them flexible when things tighten up. New investments are also signaling where the industry is shifting. CBC Global Ammunition is moving forward with a $300 million manufacturing complex in Pryor, Oklahoma. The facility is expected to be operational in 2026 and could significantly reduce U.S. dependence on foreign-produced 5.56 and 9 millimeters. They're betting on long-term domestic growth and possible political tailwinds in 2026 and beyond. Companies with specialized offerings are also finding ways to stay relevant. Norma has maintained a strong presence by focusing on premium hunting and match-grade rounds rather than high-volume plinking ammo. Their low overhead and niche product focus insulated them from the worst of the price collapse. In retail, outlets that avoided massive speculative buys and stuck to just-in-time restocking are surviving with lean operations. The lesson is clear. Size and diversification matter. Brands that hedged across military, hunting, and export markets are holding steady. But even these stronger players are facing outside pressure, and the next major variable in this industry shakeup isn't civilian, it's military, and it's exposing deeper cracks in our industrial base. So, while the civilian market is flooded with ammo nobody's buying, the U.S. military is quietly dealing with the opposite problem: rising demand and a strained industrial base that can't scale fast enough. The Navy, in particular, faced critical shortages during operations in the Red Sea between 2023 and 2025. Admiral Samuel Paparo openly admitted that the Navy burned through munitions, including small arms and ship-based interceptors, at a rate that exposed serious gaps in America's resupply capabilities. The concern isn't just volume, it's readiness. The Department of Defense has been increasing procurement contracts since 2024, but a fragmented and financially unstable ammo industry isn't equipped to meet those demands quickly. Many domestic plants that supply both civilian and military markets scaled down in late 2022 when commercial panic buying cooled off. Now, with contractors stretched thin and raw material costs still high, ramping production back up isn't as simple as flipping a switch. This disconnect is dangerous. You've got civilian suppliers sitting on pallets of unsold .223, while the Pentagon struggles to secure volume on specific calibers and configurations for overseas operations and allied support. Some of the biggest ammo producers, like Winchester at Lake City Army Ammunition Plant, are caught trying to serve both markets while juggling aging infrastructure and political scrutiny. The bottom line is that demand is there. It's just coming from the wrong direction at the wrong time. The result is a fractured industry struggling to meet two completely different needs. And while the government tries to stabilize its supply chain, shooters on the ground still need to decide how to respond in a shifting market. The ammo industry's instability is more than a headline. It has real consequences for the average shooter. Whether you train weekly, compete, or keep a go-bag ready, what's happening behind the scenes affects how you stock up, what you can get, and what it'll cost. Right now, bulk 9mm and 5.56 are cheap because retailers and manufacturers are sitting on too much supply. But that's not a guarantee it'll stay that way. Prices aren't dropping due to innovation or efficiency. They're dropping because companies are trying to survive a collapse in buying power. If you shoot common calibers, this is one of the best buying windows in years. Prices are back to pre-COVID levels, and some shops are moving products below cost to clear storage. But this kind of surplus isn't sustainable. If the bankruptcies keep piling up, supply could shrink fast, especially if military demand continues to pull from the same raw material pool. Shooters who rely on niche calibers or high-quality defensive loads should be paying closer attention. Those products don't get overstocked the way FMJ does. If those lines get trimmed, or if one of the better boutique manufacturers goes under, restocking gets a lot harder. The best move right now is to assess what you truly need and buy accordingly. Not in panic, but with strategy. The market is wounded, but that creates opportunities for smart buyers who understand the bigger picture. And with everything pointing to long-term change, this isn't just a phase. It's the start of a new reality for the ammo world. What's unfolding in the U.S. ammo industry isn't a short-term correction. This is a structural reset. Years of reactionary buying, political volatility, and global supply disruptions created a system that wasn't built to sustain long-term equilibrium. Now that the panic waves have passed, the industry is collapsing under its own weight. Too much capacity, too little demand, and no margin for error. The bankruptcies we're seeing are just the front edge of what's likely to be a broader consolidation. Manufacturers that survive will be leaner, more automated, and less reliant on the boom-bust cycle of civilian ammo spikes. You'll see more strategic partnerships, increased military contracting, and fewer product SKUs overall. Expect bulk plinking ammo to stay cheap for now, but specialty rounds, including match, subsonic, and bonded defensive loads, will likely see pricing corrections or reduced availability as companies focus on volume to stay afloat. For the average shooter, this means adjusting your expectations. Low prices are nice, but they're being driven by an industry that's bleeding. If you care about consistency in your supply, especially for training or defensive use, now's the time to track who's still producing, which SKUs are being discontinued, and which shops are clearing out inventory for good. This isn't the end of the ammo market, but it is the end of the cycle we've been riding for the last 5 years. From here on out, it'll be a more cautious, less forgiving industry. And whether you're a competitor, a prepper, or just someone who shoots on the weekend, I'm sure it's going to change how you plan, buy, and shoot moving forward.